Yahoo Finance has officially announced the company of the year. And this year, it's been a company at the center of Wall Street's bet on artificial intelligence, OpenAI. Here's what OpenAI CFO Sarah Frier had to say about the award.
We're energized to get an award like this. It really cements, I think, what ChatGPT has become, which is the world's default intelligence layer.
Joining us for more, Yahoo Finance executive editor Brian Sazi, who helms this whole process for us.
I love doing this award, Julie. This is cool stuff.
I know you do.
I really do.
You're a big winners and losers tallying guy.
But look, and also in the running, Julie, was Nvidia. Now, I'm not going to sit here and say that Nvidia didn't have a great year, not a transformational company, but at the end of the day, OpenAI has been at the center, I would think, of the market narrative. When it announced a big deal with AMD a couple months ago, AMD's stock shot up. Then you have OpenAI also potentially becoming an investor in AMD. They're putting orders in for Nvidia chips. So this company, at least to me, and our editorial team, at the center of the AI trade.
Yeah, and this is the first time, if I'm not mistaken, that we have chosen a private company.
That is correct. This is the first time. I should mention, I was just talking about Nvidia. They actually won in 2016 before they were really Nvidia. At the time, they were just a gaming chips company. But again, OpenAI, first private company we've awarded to, with good reason. The valuations have gone up. I encourage everyone to go onto the Yahoo Finance Instagram account. Really some awesome charts out there right now showing how much the valuation has in fact risen for OpenAI. A bunch of great feature pieces now on our homepage looking at what's next for OpenAI, which could include hardware, Julie. Hardware, yes. I don't know if it's going to be an iPhone killer. Sarah, I asked her about when this hardware could potentially come. Of course, they acquired Johnny Ives' company. Of course, Johnny worked with Apple CEO and founder Steve Jobs to create the iPhone. I don't think this device is coming in the first quarter of next year, but they're clearly working on it despite them being in a code red moment.
I don't know, that pebble thing that you wear around your neck, what is it called? The Friend? That AI hardware device?
That's a great name. That's a great name.
I think that's what it's called. That one didn't, I feel like
there's
with a clunk.
There was a lot of speculation that Johnny likes pens. So I was trying to imagine while I was doing this piece, like, if I have this on my desk, does that somehow talk to me? No idea. But I think the company has not. There's been a lot of focus of the past few weeks of them being in this code red moment, really drilling down on ChatGPT and its functionality, who take the fight back to Gemini 3. You'll see more updates very soon, Sarah was telling me, on ChatGPT. But I don't think they have stopped working on hardware to reinvest in ChatGPT.
I mean, yeah, and the latest, they have now come out with an updated ChatGPT in response to that code red. But what you're talking about being at the center of the AI trade, that's for good and for ill, right? Let's not forget that there's a lot of questions about its centrality as the fulcrum for this whole thing, and that means that there is vulnerability in the system because their plans are extraordinarily ambitious. They're spending plans, and there's been a lot of questions about that huge spending at the same time that they are burning and burning and burning cash, and the revenue ramp is, there are questions about whether it's going to ramp fast enough to meet that spending.
You're right on. And what this is the term that we've been talking about for weeks, circular financing. And that's why I think Sarah Frier is the perfect CFO to be running OpenAI at this juncture. Of course, she worked with Jack Dorsey at Square. She was the CFO. She was the CEO of Nextdoor, where I think you and I originally met, Sarah. She knows how to raise money. She knows the people to connect with to raise more money. I would suspect they're going to raise more money next year because they have to fuel their ambitions. But to your point, at some point, they're going to have to, I think, give a clear line of sight on when profitability will be hit.
Right, and of course, an IPO is somewhere in the
We asked Sarah about IPO. Kind of a similar answer that I got from Sarah when I talked to her at the Goldman conference in September. She wasn't going to come on today, of course, and announce they're going public.
Right.
That's not how it goes. Could it happen next year? I'm not ruling it out.
Yeah, interesting. Okay, we look forward to talking
Thanks, Julie. Appreciate
more
it.
about this. And as part of our Company of the Year coverage, you're going to have a special guest on your show today.
Special guest? I know. I know. Well, you didn't think I know that? I just wrote the show script. Of course I know that, Julie. I'm so excited. You're going to be at the top of the show. You're doing triple duty today.
Yes, looking forward to it.
All hands on deck.
Okay, thanks, Us.
Big day for Yahoo Finance as we unveil the winner of our 11th annual Company of the Year award. The company getting the award this year and beating our Nvidia in the process, OpenAI. OpenAI is the first private company to ever win our highest newsroom award. Hat tip to y'all. Here's what OpenAI CFO Sarah Frier told me exclusively on two key fronts. First, what the company currently being in code red exactly means.
Code red is really just saying to the company, the main thing needs to be the main thing. And so if you are working on many things, but you're being told you have to get this done, in particular, a big focus on ChatGPT and how we show up for our users, and it might be consumers all the way through into enterprise users, you need to prioritize that first and foremost.
In other words, in life, focus is good. Second, the financial outlook for OpenAI, which is very critical to the company making good on its many promises to the entire tech ecosystem.
Our compute strategy has to have a multi-year lens to it. So it's about compute we will buy over 5 years, 7 years, even 10 years. So when you hear a lot of these big numbers, think about them as much more spread out over time. And then beyond that, of course, we need to keep building our business model to meet our commitments. But thus far, we are the fastest growing consumer platform the world has ever seen.
All right, let's get to our opening bid roundtable here with some hot takes on our winner, OpenAI. Tom Essay, Sevens Report Research founder, Ivana Delaveska, Spear Invest founder and CIO, alongside Morning Brief and Markets Catalyst anchor, Julie Hyman. Julie, I want to start with you here. You and I go back to with Sarah over at Nextdoor when she was the CEO. But looking forward now, it is amazing just to see, one, of course, how much bigger that business is, but of course, to see her at this very pivotal time.
Yeah, this pivotal time when, as you and I talked about earlier, she may be very good at fundraising. We have seen, obviously, OpenAI just rake in fundraising, but they are burning cash at a high rate. So now the next challenge for them is, even as they continue to raise funds, right, either in the private markets or eventually in the public markets, they are also going to need to ramp up that revenue so that they will not be reliant on fundraising alone in order to fund their business. So that's really going to be the test, I think, for OpenAI. Maybe not in 2026. Maybe they can still ride this fundraising wave for a while yet. But at some point, they're going to need to ramp up the revenue as well in order to help fund everything they're talking about and to help sort of prove that there is a return on investment for these large language models and for what ChatGPT in particular can provide.
Tom, let me get over to you here. How important is OpenAI next year continuing to not only secure the money it needs, but secure that money from investors willing to pay an even higher valuation? How important is that to the AI landscape?
Good morning, Brian. Thank you for having me on. This one word, critical. It's absolutely critical, not just to the tech sector, but to the entire S&P 500. Because if all of a sudden we hear even a whisper about OpenAI having funding challenges with all of the money they have promised and committed to, and all of the stock gains throughout the tech ecosystem that has produced this year, then we are talking about air starting to come out of a very big balloon. And if you combine that with what we're seeing from Gemini, where there is legitimate competition for ChatGPT now, unlike they have seen since they burst onto the scene 3.5 years ago, it's a major, major issue, not just for the tech industry and the tech sector, but for, frankly, every sector in the market.
Ivana, not just, good to see you here. It's not just OpenAI is likely going to have to raise more money next year at a higher valuation. It's Anthropic and many companies out there building models like it. Do you think we have reached peak growth rates for AI companies like this?
Well, that's a great question. I think we still don't know the answer to. I don't think the growth rates are peak anywhere close to being peak. I think we're going to continue to see growth. I think the bigger question, to Julie's point, is whether we're going to be seeing the returns on invested capital. I think that's what investors are really focused on right now, because you see these numbers and user growth, but if that's all funded by capital rather than that's not really returning, I think that's going to be something that people are really closely watching. We believe that ultimately the returns will be there, especially as we see this next wave of infrastructure put in place. You're going to be able to start seeing some of these AI agents come at a relatively low cost. I think that's really the key that we're looking out for in the next 12 to 16 months. But we do believe, so we believe we're going to see the returns. The market is not so sure. So that's why we're at this interesting point in time.
Ivana, do you think we are in a bubble, or what we're seeing, whether it's capital raises at higher valuations, growth rates, all that's normal given the enormity of what we're seeing with the pure technology that is AI?
So we don't believe we're in a bubble, and we're basing this off on valuations. So if you see current valuations for companies like Nvidia, companies like Broadcom, they don't scream particularly high compared to history, especially given the growth rates that these companies are posting, specifically for AI, over 100% growth rates, right? So, and the valuations are within historical ranges. So we don't believe we're in a bubble. We think some companies are over promising, and then some companies are under promising. So that's really where we're focused on, to find the ones that maybe are guiding conservatively and can exceed expectations. I think on that spectrum, OpenAI screens pretty negatively because they are promising some really big numbers, and the question is going to be whether they will be able to deliver on those. Google, on the other hand, they're not promising too much, right? And they do have some interesting technology. So I think you see a spectrum of companies. Some are a little more aggressive and some are a little more conservative.
Julie, what I find so interesting amongst many threads here in this OpenAI story, they're not the only company with a model. Then there's Anthropic, Gemini 3 is having a moment, and at this point, it does seem like OpenAI has fallen a little bit behind.
Well, but then OpenAI then came up with an updated ChatGPT, and so they were seen maybe as catching up here. I think one of the background and overarching questions has got to be that some have posed is this a commodity, or is this something where there is a real technological edge? You know, even if there are small technological differences and advancements between these models, is there a big enough difference for an enterprise to switch its spending from one to the other? Is there enough upside to switch to one? Or do you see a commodification of that whole LLM space, and it's really whatever applications are going to be placed on top of it, the agents, what have you, where the real money is eventually going to be made? As everybody says, it's a cliche at this point, it's early on in the cycle, we don't know yet. We don't know, but there's an awful lot of money being invested in something that we don't know the answer to yet.
Good point, Julie. Tom, I asked Sarah Frier about if their hardware ambitions. Look, she wasn't going to say, we're coming out with a new device next year in the first quarter. Wasn't going to say that, and I get it. But when they do come out with it, and assuming they do, I mean, do you think they could really make inroads against the iPhone?
No, I don't. I think that this has been tried so many times, and it's just, to Julie's point about whether or not this is commoditized with apps on top of it, it's not the iPhone that's so great. It's the fact that the apps are on top of it and everybody's integrated into it. So you have to break that sort of cycle of dependency that we all are on through the iPhone apps itself. And I think that you can come out with the greatest ChatGPT in the world, but unless you can layer in all the apps that are on top of it to interconnect with every part of our daily lives, that's a really big moat to cross. And I think if that's the way they're going, I personally view that as a potential mistake. Apple is the axe in that space. I don't think anybody can break them. I think the ChatGPT's path to success is to create the best LLM that they possibly can and become sort of the number one in the space and stay the number one in the space.
Tom, what do you like in terms of AI trades into next year? Is it still the tried and true? I mean, are we still staying long, Mag 7?
To a point, but I think we're going to see some pretty massive bifurcation. So I think that's sort of the next evolution of this trade, where there are going to be winners and losers within the Mag 7. If I had to pick one stock that I think is probably my favorite, it's Google, because of Gemini. And I think this is absolutely a code red for OpenAI, because Google has such a dominant position in search. It's very easy for people and enterprise to simply layer on Gemini on top of what they're doing, as opposed to going to a new ChatGPT or something like that. And so I think that Google looks very attractive. I think companies like Oracle that are not overextended financially, but are sort of raising eyebrows with a lot of the spending that is tied to OpenAI. I think that companies like that could struggle. So for me, it's not all the Mag 7 is going to do well. There's going to be some pretty serious bifurcation. We've seen it in the last, say, 2 months of 2025. I think that gets worse in 2026.
Ivana, going through this process, the two finalists for this award were Nvidia and, of course, OpenAI, which has won the award. But throughout the process, Ivana, we never really even mentioned Meta. I mean, how much of an AI play do you view Meta at this point?
Well, Meta is a real AI play on the application side, but we haven't really seen them showing benefits from this new wave of investments, right? So that's really going to be the key to watch going into next year, whether they're going to be able to leverage this next wave of investments into returns on invested capital. So we saw them being able to do that with the first generation of GPUs, right? When they were facing a lot of competition from TikTok and they started implementing AI and they were really able to improve their algorithms significantly. Now the next wave is going to be whether they're able to introduce marketing AI agents that can help you manage your exposure, marketing exposure effectively. And I think that's coming. It's just going to be a question on when, right? So we're trying to look for early signs of that being effective and offered at a low cost.
Julie, over to you.
Yeah, I just wanted to mention 2 points here. First of all, if you look at the recent sell-off that we saw in stocks, and then the recovery has not been led by tech. It's been led by consumer discretionary and financials and industrial. So the broadening that we, have been talking about for a long time, it's starting to happen a little bit. It might be short-lived, but it is happening. And point 2, and this is something that investors have been bringing up with us as well, is that the AI trade is not going to be limited to AI or even tech companies at all, right? Investors are increasingly going to be looking to companies across industries, how they're leveraging AI in ways that we can't even predict yet in order to improve their businesses. And so that's something I think we're going to start to see and really start to look for next year when that starts to materialize. And that's going to be drawing some investing dollars as well.
No, good point, Julie. Yvonne, let me get back to you real quick. Do you view Nvidia, Tom bullish on Google Alphabet, is Nvidia still the most purest way to play the AI trade?
Well, it's certainly the purest way to play the AI trade, but you're not getting broad exposure, right? So it's really focused on the hardware side. So if you're looking to play more of the application layer, I think then Google would be a better way to get access to that. I think where we stand is we're looking, to Julie's point, for broader implications of the AI trade and trying to find opportunities that maybe are not on people's radars. So one example is the space economy. I think that's going to be really impacted here if we can actually get these data centers operating in space. Other examples are cybersecurity. So I think from where we stand, Nvidia is a really good way to play the hardware side, but they don't give you a broad exposure to AI anymore.
Tom, over to you. This has been another good year for the tech space, even outside the Mag 7. I mean, there's been some challenges, but by and large, another good year for the tech sector broadly versus other sectors. Now, we just got a rate cut. We may get 1 or 2 more this cycle. What does that mean for tech stocks next year?
It is still positive, right? I mean, it's not considered a cyclical sector, but certainly it benefits from generally solid economic growth. I think the issue you run into is valuations, right? As you look around the space, AI enthusiasm, as we call it, has really propelled the entire tech sector higher. Now, if we go into a state of 2026 where there's bifurcation, where there are winners and losers from AI, which we haven't seen before, then does all of a sudden that valuation come down for the sector a little bit. So I don't see it as sort of an imminent crash looming unless there's some sort of major AI issue. But I do think that the tech sector we're not going to see this racing away outperformance that we've been so used to for the last couple of years. And again, I think that some people think it's either, tech can continue to lead the market, or we're going to see a bubble burst. There's also a middle ground where tech performs maybe generally in line, maybe a little bit worse than some of the other sectors, as long as economic growth stays solid.
Julie, last word to you. I was reflecting a lot, when I was studying the bubble from 1999 to 2000, that tech bubble. I just don't think this moment is similar. I know why people want to draw the comparisons, but thinking back to your experience, I mean, do you think there's similarities or these are 2 different periods?
No, I think there are absolute similarities in the sense that you have a technological innovation that is seen as world-changing, but in ways that we don't quite comprehend yet. That's similarity 1. The other similarity that we are not quite sure is a perfect parallel, is just does history repeat or does it rhyme kind of situation, is whether the builders of the infrastructure will retain their value. In the dot-com bubble, they did not. The builders of fiber, for example, did not retain their value in a significant way. In other cases, it took them years to gain their value back. So that's still kind of an open question at this point. And something else that a lot of investors have talked about in a way that this is different is that it is compressed. It's happening in a shorter period of time. in terms of the build out. So I guess we'll get the answer to our question hopefully sooner rather than later.
I'm sure we will. All right, big thank you to the Opening Bid Roundtable. Really appreciate it on this really important day here with this award winner. Welcome to the Opening Bid Unfiltered podcast. I'm Yahoo Finance Executive Editor Brian Sozzi. There's been one company at the very center of the AI trade this year. That is none other than OpenAI. OpenAI has won Yahoo Finance's 11th Annual Company of the Year award. Here is why. First, it undeniably led the market narrative for investors in 2025. When it announced big deals, stocks popped. When it said something cautionary, stocks got hit. Second, OpenAI secured scores of new transformational deals with large public companies such as Nvidia, AMD, and Oracle. And three, its year of deal making will likely see the company end the year as the world's most valuable private business, with an estimated valuation of $500 billion, according to Yahoo Finance data. I sat down exclusively with OpenAI CFO Sarah Frier to go inside the company's next chapter. Sarah, always good to see you. Thank you for doing this. Congratulations on winning this award. I know it's busy times for you, which we will get into, so thank you for doing this. What has your year been like as CFO of OpenAI? Can you put it into one word?
It has been busy. But thank you, Brian. So first of all, we're energized to get an award like this. It really cements, I think, what ChatGPT has become, which is the world's default intelligence layer. On top of that, compute has become the foundation of this next era of AI. And I think thirdly, it's been a year where we have really hit kind of this day one of the next phase for OpenAI. We became a public benefit corp. We've raised a lot of capital with a really strong balance sheet. And we've seen, as you said, a lot of the ecosystem really start to move towards us to help us create this future.
Over the past, let's say, 10 years of my career, Sarah, I've watched your career from afar. You and I have talked in your prior roles as CEO of Nextdoor. You've grown businesses and worked with some really transformational leaders. I think about the business you helped scale at Square, help Nextdoor grow its business. Now you're at OpenAI. How are each of these situations different, and what similarities do you see?
Yeah, so I think first and foremost, I do love growth. Growth is a moment where you get to really see impact to your customers. And probably the big thing for me this year has been the shift from not just 800 million weekly actives on our consumer platform, but we've gone from kind of single product on a single platform, doing a single thing in terms of the modality of the actual model itself. And also singular revenue streams. And what I've seen at those other companies, but now I'm seeing, just at a much faster pace at OpenAI, is the model itself has gone to multimodal. So you can now engage with voice, with vision, with auditory. We've seen our revenue stream go from a very simple single subscription, $20 a month, to being able to buy a high-end subscription for people who are power users on products like Codex, to being able to offer ChatGPT into areas of the world where $20 a month is price prohibitive. And we've started to offer credits. We have, of course, now offered ChatGPT in many different ways. So you can get it as an app on your phone, you can get it on your desktop, you can get it through our Atlas browser, and of course, you can start to download our Sora app. So a whole other way to experience AI in video. And then finally, we are multi-cloud. So in terms of risk mitigation on the back end with compute, we now have many, many more suppliers and partners in our ecosystem. And that helps risk mitigate, but it also introduces a little bit more healthy competition. And we think positions us to really build something incredible as we head into 2026.
You're no stranger to looking at financial statements, Sarah, to say the very least. How do you know, with a platform growing as fast as OpenAI, how do you know where to allocate capital?
Yeah, so that is probably one of the most important jobs, I think, of a CFO. It's also one of the most complex. And of course, it changes, right? You just asked what it's like to be in a growth company. A lot of what changes is you get new information, not just every 90 days, but as often as maybe every week. And you have to be able to stay nimble and flexible but also have a through line so that you are always investing both for the really long term as well as making short-term tactical moves. So I'll give you some examples of that. Sometimes it's a new product or a new feature just hits and hits big. So in 25, we said this would be the year of agents, and that's absolutely what we've seen begin to happen. But there was that viral moment with image gen back in kind of the May timeframe where we just saw our app go exponential on exponential. And that was a moment where we had to pivot and say, okay, now we need more compute to put against this. And we're really going to double down. Clearly, on the creative side, consumers are finding real value here. So that's a moment where you make a tactical shift. Another good example has been our shift towards more enterprise investment. So when we entered this year, we looked at our revenue, and it was about 70% consumer, 30% enterprise. And I think actually we did an interview where I said, it's hard for the enterprise to catch up because the consumer is growing so fast. But we said, that doesn't matter. Enterprises need to be able to get access to intelligence. So we're going to go really hard after enterprise customers and get them there. And so we'll actually exit this year with our revenue now tipped 60-40. So that's a big uplift on the enterprise side. So that was a decision too about capital allocation towards the enterprise, balancing with consumer. And then I think the hardest decision is actually around these really longer term duration compute contracts. Because of course, the compute that we've used in 2025, we didn't just find in 25. We actually had to make a decision probably in 2023. And what we have seen is that as we invest in compute, our revenue grows almost at the same pace. So if you look in 2023, the total compute we exited that year was only a mere 200 megawatts. We'll exit this year at 2 gigawatts, so 10x. But our revenue similarly, or ARR, went from about 2 billion exit in 23 to almost 20 billion now exiting 2025, actually a little bit more than 20 billion. So that decisioning about what compute we will need, not even in 26 or 27, but actually in 28, 29, 30, those are the sorts of long-term capital allocation decisions we're having to make right now as well. And so it's a very interesting balance. And I will tell you, I use our own product for a lot of that too. ChatGPT often helps me make tough decisions, or at least shows me what might be the trade-off.
Hold on, hold on. You're forecasting your business using your own product?
In finance, we have been massive adopters of ChatGPT. It's something I talk to CFOs about all the time. It can start in really small ways. Like, for example, we have agents that help us with onboarding suppliers in our procurement supply chain. We have agents that help us look at our monthly close to say, what is this flux? Like, why did this happen? We use connectors to actually connect back into other systems like Slack or into our Google Docs so that we can actually explain why did performance marketing double or triple in a particular period. And then often I will use it when I'm in the midst of like a tough problem, like during planning, for example, to say, okay, this team just gave me this planning memo. It looks excellent. But knowing what you know about the other areas where we're investing, what might be the best question for me to ask right now, or what might be the trade-off that I haven't considered? And it is fascinating and fabulous to feel accelerated and amplified by intelligence, right? Remember, ChatGPT is like having a PhD in math, physics, chemistry, biology sitting right beside you, helping you with your work.
I wish this is one of those moments where I wish this was one of those 6-hour podcasts, but you and I don't have that time, especially you. All right, let's get some numbers out of the way. How many users are on the platform? It sounded like you just told me you'll hit, 20 billion in sales this year. What does that look like? What is ChatGPT telling you it might look like next year? Does it double? And how many people are paying for the platform?
Yeah, so today we have 800 million consumer users, so weekly active users of the product. On the enterprise side, we have 1 million enterprises using the product. And remember, our enterprise business is only a couple of years old. It's kind of mind-blowing to me. From a developer standpoint, about 4 million developers are developing on the platform. And in terms of growth, we just put out a report. Our amazing econ team put out a report yesterday called The State of Enterprise AI Adoption. It has a ton of fascinating facts and figures about how much adoption is going up. One thing I would call out to your audience is what we see is frontier users in the enterprise are using messages about 6x more than even just the median. And so I think one thing we all need to be careful of, particularly CEOs and executive teams listening in, is that widening gap. You can't let it get too wide because you're going to get behind your competition. And our job is to help you figure out how to deploy it appropriately. As we go into next year, you mentioned that 20 billion, it's 20 billion of ARR. This year we'll actually do about 13 billion of in-period GAAP revenue. And our growth rate just continues to, climb. So I'm not giving forward forecasts, but to say we're very upbeat, very optimistic about what the business looks like in 2026.
You have been in a period of what your CEO, Sam Altman, has called Code Red. Now, full disclosure, before he came out with that memo, I never heard of Code Red or any of those moments or calling it that moment. During this moment, what is it like inside of the company?
Yeah. So first of all, I'll tell you, I actually personally love a Code Red moment. It is a bit of a tech term. I've seen it used across almost every company I've ever worked in. You can't do it too frequently because it exhausts people, and you start to get a little bit the boy who cried wolf sort of thing can kick in, where people just hear it and then they go about their business. Code Red is really just saying to the company, the main thing needs to be the main thing. And so if you are working on many things, but you're being told you have to get this done, in particular, a big focus on ChatGPT and how we show up for our users, and it might be consumers all the way through into enterprise users, you need to prioritize that first and foremost. It starts with our models and making sure that our models are on a faster kind of speed of velocity of iteration. As I said earlier, we do put new updates into the model all the time. So even though we might not name it a new model, the ChatGPT, the current is 5.1. We may have a new model coming soon. But that 5.1 is not the same 5.1 that you got a couple of weeks back. But we want to speed up that velocity and really take what we're learning both in pre-training, post-training, and then even during consumer usage, there's a moment where if we offer more compute, and this goes back to why we need more compute, we can actually create a better experience and more learning about what is the highest, best answer we can give a user. So Code Red is about focus. Main thing is the main thing. And I think it's really good for companies. Sometimes we don't always call it, by the way, a Code Red. Like this time last year, we were doing the 12 days of Shipmas. The feeling was equally intense, just sounded better. Maybe our branding was better back then. But I think it's about bringing intensity. And by the way, I think it's only something that startups do well. Like big companies find Code Reds hard because how do you tell, 100,000 people they all need to work on something with intensity? It just depletes itself as you kind of ripple out. Versus in a company at our scale, truly everyone can know this is the most important thing to get done between here and, we usually have exit criteria. And again, we don't want it to go on for too long because we also want people to have more rhythm and not get burned out. But OpenAI is an intense place because we have a big mission and we need to do it as fast as possible.
When do you anticipate being out of Code Red, and what are those triggers?
Yeah, so as I said, there's always a very clearly defined exit criteria when you go into a Code Red. Like when I've seen them not work in prior lives, different companies, it's usually because the exit criteria was either too nebulous, like no one really agreed on it as you set out to do the Code Red, or it was almost like so aspirational that it became like, a year plus in the making. That makes no sense. I think what we've done well here is you have an exit criteria really around what is the feel of the next kind of model for ChatGPT? How's it going to present to consumers? How do we think about balancing things like personality, use case, and so on? What I get excited about in ChatGPT, right, in where we're headed into 26, is a couple of primitives. So number one is that we're making sure that you're making more use of personalization so that memory makes ChatGPT work for me, Sarah, you, Brian, but not generic. I think the second thing we're really focused on is how do we become a little bit less insular? So it's not just ChatGPT by itself, but how do we offer more apps within ChatGPT? So for example, if I want to book travel, I can now call upon Expedia or Booking.com to book travel inside of ChatGPT. If I want to do more creative design work, I can call on Canva, and you'll see us do that with more companies. And then conversely, if we're using an app and you want to pull that up in your Atlas browser, you can now pull on intelligence in the sidebar to help work with the app that you're in. So that's a way to go from being more insular to much more of a platform. And then the final piece, which I think probably resonates most for the consumer in a way, is ChatGPT becoming that super agent. So it might be my concierge doctor, it might be the tutor that I use with my kids or even for me so I can learn more, or it might be my travel agent or my stylist. You can see it working today in study mode, where ChatGPT doesn't just manifest by giving you the answers. It actually works in this more Socratic way as a teacher. And I love that because it keeps testing as it goes to see if you're learning. And that might be because you're a university student. I've got one of them right now, two of them right now, doing finals. Or it might be as a later in life learner, for example, that's decided to switch careers. But that's that super agent that I think we'll see a lot more of in 2026.
Clearly, you're putting a lot of capital, a lot of focus during this Code Red moment on ChatGPT. Does that mean we will not, and you and I talked about this, I think, at the Goldman conference, does that mean we will not see that hardware device from an OpenAI over the next year? Like, is that pushed further out?
Brian, I told you you're not allowed to ask me about the hardware device.
Well, I didn't ask you what it may or may not be. I just asked if it is coming, if it is coming.
No, the hardware is still very much coming. Hardware has a longer gestation period is usually how I think about it, right? It was one of my learnings at Square. Software, has this very fast-paced, literally you can turn out software in days, weeks, months. And in fact, now with our Codex product, you can really do it in hours and it'll do it autonomously for you. Hardware, you have to make decisions over quarters, years even. And so that device is still very much on track, but will be, a year plus in the making. So no changes right now, no announcements to be made, or Johnny Ive will come and get me. But we are quite excited about what that substrate can mean for how people experience AI. Like I think as we talked about at Goldman, the era of the internet and then mobile really had us think about, a flat device where we kind of talk with our thumbs. AI is multimodal. We can experience it in this much more human, intuitive way. We can talk to it, we can listen, it can see. We just don't do that enough. It's not yet in our vernacular as individuals, and I'm pretty excited for what a new hardware substrate can bring.
Fair enough. I want to see if you can help me settle some of these debates, because I get these questions. I'm like, all right, well, I'm going to put these to Sarah and very simply see what she has to say. Does the next update on ChatGPT put you ahead of Gemini 3?
I think this model kind of chicken egg, who's ahead, or some chicken egg's not quite the right phrase, but like who's ahead, in some ways, I think is just going to keep happening. Look, our models are incredible. I am pretty excited for what the reasoning part of this next model is going to bring, particularly in an enterprise setting, actually. I think actually one of the biggest unlocks is less about who's got the best model and the most intelligence, but how do we actually help people use it in a much more intelligent way, right? Our model, I already said, it's like PhD level in everything, and yet people still largely use it for things like, what's the weather in San Francisco today? Or, important things in life, but like, what could I buy my 18-year-old son? It's not quite what I'd probably ask, someone who's sat down next to me and is a physics expert in black hole theory. And yet that's kind of what we're using it for. Beyond the model layer, as I've talked about, we have become much more sophisticated. So it's about the APIs. How do people access our products? API growth has been probably one of the biggest surprises for me this year in terms of our overall P&L. Then it's the application layer. How do people feel and touch the app? And then finally, that kind of substrate layer that we talked about with consumer hardware. And so I think we're much more multidimensional today. And so getting into like who's got the best model is probably something that keeps changing. But I do think it's incredibly important that we remain state-of-the-art frontier. And of course, I always think we have the best models.
Next one for you, and you've heard this before. OpenAI has $1.4 trillion in various commitments, and if it does not meet expectations, it's going to bring down the whole tech sector. What say you?
So I think, first of all, people get way caught up in the fact they think that's all happening today. As I've talked about, our compute strategy has to have a multi-year lens to it. So it's about compute we will buy over 5 years, 7 years, even 10 years. So when you hear a lot of these big numbers, think about them as much more spread out over time. Second, many of those numbers, in some ways, there's a double counting going on in the press. So when we talk about taking down, say, a large data center site with our partner Oracle, we have to be able to put chips into those data centers. And so often we will then go do a deal with, say, an AMD or with an Nvidia, or even our own chip hardware, by the way, because we know that's now going to go into that data center. The press often hears both numbers and kind of says 2 + 2 is 4. And I'm saying, no, it's 2 and 2, because it's the same fully loaded data center with chips in it that's going to be our compute future. And then beyond that, of course, we need to keep building our business model to meet our commitments. But thus far, we are the fastest growing consumer platform the world has ever seen, the fastest growing enterprise platform the world has ever seen. Just even in my time of looking at the company, in 23, we did $1 billion of revenue in 1 year. In 24, we did $1 billion a quarter. We just a couple of months back hit over $1 billion a month. And the model and the P&L has continued to build since then. So we're rising to meet that challenge. And I think in a world where we're headed towards AGI, AI, mass intelligence out there in the world, we just see no reason to stop right now in terms of the requirements and the need for compute.
Philosophically, Sarah, inside the company, do you need to be a profitable company to become a public company?
So philosophically, I think you have to be able to show investors that there is a sustainable financial model in front of them. And the best investors in the world have looked at our financials and have made the investment decision to become part of our cap table. And I'm really proud of those investors, folks like T. Rowe Price, Fidelity, Dragoneer, SoftBank, right? There's many, Altimeter. There's folks that we have announced, and then, of course, folks that want to make sure that they stay somewhat confidential because that's how they run their business. So that, I think, is the most important thing for investors, is a belief in a strong, sustainable business that's unlike anything that they have experienced before, and that there is a path to profitability over time. And often what we can show them is a lot of our cohort behavior. So for example, what we have seen with ChatGPT is one of my favorite things. I call it the smile curve. So in terms of usage in consumer platforms, usually what happens is people join, and then over time, the cohorts naturally degrade because some people join, they don't like the product, some people join, they forget to use the product, and so on. In ChatGPT's case, what we have seen is as we launch more and more features, and it could be something fun and creative like image gen, or it could be something very deep and intellectually stimulating like deep research, more and more people who have joined come back and come back more frequently. And that is an incredible underpinning to a business model. And then, of course, this lift in enterprise penetration, adoption, and ultimately revenue streams, investors love that too, because that tends to be a very sticky revenue stream where businesses see through things like connectors a way to help their data come to life. And that makes, us just an indispensable layer in their tech stack.
Do you feel a pressure from your investor base to go public next year, or they're still saying, look, stay private, continue building what you're building, come talk to us in, 2 years?
I think our investors trust us to really look hard at our business and come up with the right strategy and the right path for OpenAI. That said, if you think about a lot of investors, often they're looking for an exit because they've been in a venture capital investment, for example, for 5, 6, 7, 8 years before that investment really can mature. Again, what's incredible about OpenAI is we really did our first fundraise last September. Up to that point, right? Remember, we had really been funded largely by Microsoft, but we didn't have a lot, really any external investors. And so none of our investors are, none of their investments have been in there for a long period of time. We always keep an eye on liquidity because, of course, it's not just about institutional investors, but our employees are also investors in the company. And so we think about things like liquidity and how we balance that. But right now, you want to make sure you have a strong business model. First of all, a strong product. And in our case, it goes back one more step. Incredible models, building strong products across consumers and enterprises that build a strong business model output. And if you do all of that, then you always have the optionality to decide what's the best way to keep raising capital and to show up in the world.
Sorry, I wish you could see my paper because I have like 20 short rapid fire ones I have to ask. But let me just pick 3. These are short, just before I let you go.
I'll try to be short.
Short. It's 2035. What is the biggest impact OpenAI has had?
I mean, you've brought mass intelligence to the world. I mean, we live in just a totally different world, almost like imagining what it'd be like to live in a world without electricity or live in a world without the internet.
Sam Altman in one word.
Curious.
Okay. Best career advice you ever received?
To not fixate on perfection.
All right, we're rolling here, Sarah. What's your superpower?
My superpower? I think I'm tireless. So I will never give up. And I think we joked about it at the beginning. My husband often says I have only an on or an off switch. But I think I too, like Sam, I'm very curious. And I also will not stop until we get the thing done that we need to get done.
Last one, I promise. The quality you value most in leaders?
Steadfastness, that what they tell you is what they do.
Sarah Frier, thank you. Congratulations, 11th Annual Company of the Year Award here at Yahoo Finance, OpenAI. Thank you for always making time with me for numerous years. I appreciate it. Thank you.
Yeah, my pleasure. And thank you. It's a total honor. And as I said in the top, we're really energized when we get recognized this way. So thank you.
Thank you. I appreciate it. And good luck in 2026. That is it for the Yahoo Finance Annual Company of the Year Award. Be sure to like and subscribe to Opening Bid Unfiltered on all major podcast platforms and YouTube.